To gain the most from our financial statements, we as owners must first ask two important questions. What are your measures of business success? And how often do you measure the financial performance of the business? The first question, how do we measure success? A clear definition of success is elusive. It's going to be different for each person that we speak to, each business founder, each business owner. And why is that? Because the measures of success will vary by the founder. Some business owners will consider a rising bank account as a measure of success. Others will consider establishing a strong reputation in the marketplace as a measure of success, while another will want their business to be known for the superiority and quality of their goods and services. Either one of those measures is worthy of consideration. However, the founder must address a central consideration when attempting to make a singular choice, meaning a choice around what does success look like in the business. Given that the owner's ultimate success will arise from the successful management of the business, which means having a business that is profitable, having a business that is sustainable, meaning it'll last into the years, having a business that can maintain a steady revenue increase. We must understand the necessary dollar that is needed, or dollar of investment that is needed over time to achieve any one of these qualifications. In other words, we have to know how much is it going to cost us in order to produce what we desire, in order for us to achieve the dream that is so very important to us, that drives our passion. The financial record will help us to understand, in this case, the use of dollars, so we know how much it took us to get to this point. And then with that information, we can then look forward in time and estimate or budget what we think we will need in the future. That's why these records are so important. They provide us the historic record of what it has taken for us to achieve what we have achieved to date. Knowing how my financials are presented within the income statement, balance sheet, and cash flow statement, and how my business responds to the market changes that I experience each and every day, and also the past management choices that I have made. With information, with data provided by these reports, I'll be in a better position and better prepared to move the business forward, to achieve sustainability. And for those of you who want to scale your business, you'll be able to scale your business feeling more confident, feeling a little bit more secure in the knowledge of how your business responds to the various challenges as well as the opportunities that are presented to you. To overcome the fear, the cautions, or anxiety that is usually associated with looking at these financial records, I indicated that earlier, we must pivot by looking at financial statements as a necessary set of reports that are needed to ease your burden, as a leader. They provide the information that gives you critical insights into your business. What are those critical insights? You get to see changes in your cost. You get to see how your revenues are trending after you make a critical business decision around your marketing spend. Maybe you've decided to spend more on social media. Maybe you decided to spend more on television or radio advertising, and you want to know whether or not that expenditure actually worked. Essentially what we're talking about here, you want to be more intentional in your decision making. You want to make your choices that are being made with evidence, with fact. With intentionality in mind, you win. You win big time. And our win occurs, or our win happens, when we use accounting to learn what normal feels like. And I keep stressing that. Like when we know our ideal weight and the satisfaction that comes with that. So when I get on the scale and I'm looking and I say, oh, I'm about 220 pounds now, I really want to be 170, and I go into a diet program. Several months later, I get back on the scale and now I'm at 170. I'm at that ideal weight. I feel good about that. And I feel good about that because I was very intentional in making a difference happen. I decided to join a weight reduction program. Same thing happens with a business. I want to be intentional with the decisions that I'm making. I want to make sure that these decisions are being made based on evidence and being made on fact. We need to observe. We need to record. We need to journal. We need to review and analyze the financial results of our business in order to draw meaningful conclusions. So in short, and I hate to say this, you have a new responsibility. And I know in many cases people say, I have enough to do already just trying to run a business on a day-to-day basis. But this is a requirement of being a founder, to do the review, to do the analysis of your financial records so that it can help you draw meaningful conclusions. The financial statements are necessary tools in helping you get the information that you need, provide you with the information that you need to be able to move forward. Because it does what? It gives you visibility into your organization. And that's the heart of it. It's giving you that historic record so you know exactly what happened. From the decisions you made, you know exactly what happened due to some economic upheaval like COVID. You'll know exactly how the business performed. For all the work that's involved in looking at these financial records and making it part of your daily routine, the founder has to be willing to accept what I call a common assumption. If we as business owners continuously improve our abilities and skills, we will be perceived in the marketplace as capable and knowledgeable leaders. Literally, that will precede us when we walk into the room. That perception of being capable and knowledgeable is important when you're sitting in front of an investor or sitting in front of a creditor. Remember, all business decisions are intentional, and the founder needs financial reports to disclose the impact of all investments made by the business. So in short, when the investor approaches you and they ask you, how did you use the monies that I gave you last year? What will be your answer? Will you just say, I used them? Or will you be able to say, I used them in this way and we achieved this benefit? I think the latter is what you would like to achieve. Thus, the founder needs to accurately document financial results and use these results to support current decisions, to address daily business concerns, or build upon future opportunities. In conclusion, review your financial records and verify they are appropriate for your business type. So going back to the beginning of our presentation today, if you're a service company's financial records look a certain way. They mimic each other. Same with a retailer, same with a manufacturer. Make sure you become comfortable with what your financial statement should look like for your business type. You should review those records to make sure they're accurate. And here I'll give you a quick example as we close this out. Take a calculator, pick up your income statement, and add up the numbers and see if you come up with the same total that appears on your financial record. I can testify. I've added up income statements in the past for various businesses, and they did not add up. They did not reach the sum that was shown on the record. There were errors in the document, and there were errors in the summing of the totals. If a banker sees that, they will immediately throw out your record. They will immediately discount your application for a loan, and you will not secure that loan. Next, you want to identify accounts that are unfamiliar to you and ask your accountant to explain how these accounts are or were prepared. Again, in interviews I've had with business owners, I've looked at their records, and there will be an account name there, a name of a number. I'll ask the person, what does this name mean? What does this label mean? And they'll go, I have no idea. And there'll be a large number in there, 29,000, 35,000. That's a lot of money to show on a record and not know where it's coming from or how it's being accounted for. Again, that becomes a red flag when you're talking to investors or when you're talking to creditors. They will see that, they will ask you the question. If you can't come up with a satisfactory answer, once again, it will end the loan negotiation. Next, you want to request monthly or quarterly reports from your accountant so that you can stay informed of the changes in your company's financial performance. You don't want to wait till the end of the year. You want to do this systematically. Look at it every 3 months. Or for some businesses, depending on how dynamic it is, you may want to look at your financial records every 30 days. As an owner, you'll make that choice. The last piece, you want to review your financial results with a trusted advisor to help you perform your analysis. This is getting at something that's very unique. I would advise you, if you don't have one already, I would create an advisory board, meaning find some people who are established business owners that you trust and you value and ask them to be on your advisory board. And be willing to share some of your financial records or your financial results with them so that you can share and learn from them about what you should be looking at and how you should be interpreting the results. That will help you become better at doing the analysis. That'll help you become better at using these records in the future. So let's close this out. Let's review the learning objectives for this session. 1, we want to reduce the level of anxiety that accompanies interpreting financial records and financial statements. I hope I've done that today by providing you with definitions and also helping you to understand how to use these statements in your business. We want to clarify the difference between the various financial reports. As you learned, there are 3: income statement, balance sheet, as well as cash flow statement. Each one is a separate template with separate organizations, so you should understand what appears on each of them. On behalf of the Chicago Minority Supplier Development Council, I want to thank you for joining us for this session. Remember, there will be additional sessions for you to join and learn more about how to improve your management practices for running your small business. Until later, have a great day.